Hello everyone, welcome to my channel CA Sayali Thakur. I hope you all are in good health and happy. Today we will continue with the final accounts. In last video we discussed the trading account and profit and loss account. So balance sheet is the next step in the final account. We generated the profit and the profit gets transferred to the share capital account, which is part of the balance sheet. So today we will look into balance sheet and the important aspects of balance sheet and how one should read the balance sheet. So let's get started. Balance sheet. So what is the use of balance sheet or why an enterprise has to prepare the balance sheet? The first and foremost importance or the use of balance sheet is balance sheet reflects the health of the said enterprise. Health as in for example, we test ourselves and we get a report. In the report, we see what are the good parameters in our health and what are some weak parameters where we need to work on. In the same manner, balance sheet shows the health of the company, as in where the company is in the good health and where the company is weak and needs to work on. So the first use of balance sheet is it shows the health of the company. Secondly, balance sheet shows the performance of a given company or how stable an organization is from the financial point of view. For any business, financial stability and financial growth, these two are very important, as in anybody is doing business for growth and for financial benefits. Nobody is here in business for any losses or to increase the liabilities. So balance sheet will show you how good the company is performing. Secondly, each year it is a useful document for the stakeholders. Stakeholders can be anybody, they can be your customers, they can be your vendors, they can be anybody who is intending to invest in your company, or they can be your current investors, your current shareholders, and also the financial institutions. Suppose a company has borrowed some funds from any financial institution or any bank, so the bank needs to understand what is the financial health or how stable the company is. So they also need the balance sheet. So these are the important uses of a balance sheet. Now we will see the important aspects in the balance sheet. So there are certain parts in the balance sheet. So we will look into it. First is the assets. What is assets? Assets is anything which is owned by the company. Company is owner of any particular thing. So that will be clubbed as an asset. Asset is the positive side of the balance sheet. It will show what all things a company owns, where the money is invested or where the money is supposed to come from. So assets is the ownership of the company. Second is the liability. Liability side or the liabilities of the company are those things which a company needs to pay. It can be paid to third party, it can be paid to vendors, it can be paid to any financial institutions. So these are the liabilities. Third is the share capital or the equity funding. So money invested by the investors or the shareholders. So what is the money invested? So share capital will show you what is the funding for this company. So here is a small equation for the balance sheet. What it is? Assets is always equal to your liabilities plus your share capital. So balance sheet should be same, tallied. Assets should always match your liability side. So what is asset? So asset is always equal to whatever liabilities you have incurred plus the share capital. This is a simple equation, right? Easy to understand. Assets is equal to liabilities plus share capital. That means whatever share was purchased and money was invested in this company, some assets were brought from that investment, or any liability like any borrowings from any financial institution, banks, or any third party where this money was invested. It should be either invested in any asset or it should be lying in the bank. So it should always be equal. Now we will look how does a balance sheet looks. Here I have taken an example of a balance sheet. It is a T format balance sheet. In the beginning, you see the name, that is balance sheet. Here the name of the company is also given for the period ended 31st March 2020. Balance sheet is always as on date, that is on a particular date. What are the assets and liabilities of a company? On the left hand side, you see liability side. On the right hand side, you see the asset side. We will start with the liability side. Liability, first heading is the share capital. Any business has always some kind of funding or some kind of share capital investment. So that is the main liability of a company. That is, the company was started with some funds given by the shareholders. Secondly, we see the loans and borrowings. These are your long-term loans. These can be from any financial institution, banks, or any private lender. Below that, you see the current liabilities. Now, what is current liabilities? Current liabilities are the liabilities which you are supposed to pay in a year's time, in near future. So these are your current liabilities. So I have plotted some examples of current liabilities like sundry creditors, short-term loans, advance received from your customers. This is also your liability. The customer has paid you advance before you giving him the material or goods or whatever was your agreement. The customer has paid you in advance. So that is your liability. Provision for expenses. We have seen in the journal entries, we have seen in the P&L that we have to provide for the expenses which are incurred but which are not yet due. So, provision for expenses also fall under your current liabilities. On the right hand side, we see the assets. So, assets. So, first is the heading of fixed assets. Now, fixed assets are your land and building, plant and machinery, furniture and fixture for your office, and office equipments. So, these are basically your assets which help you to do the business. So, whatever share capital was invested or whatever funding you got, so from that, first and foremost thing any organization will do is buy some assets. It can be in the form of building, it can be in the form of plant and machinery. So these are your assets. The company owns these assets. Secondly, you see the investments. So investments. Now, if the company is doing really good, their cash flows are really good and they have excess cash or bank balance, so the company will obviously either put them in their stocks or put them in some kind of investments which will pay them good returns. So here are the investments. Secondly, you see the stock in hand. If you are a manufacturing company or a trading company, you will definitely have some unsold stock. It can be your raw material, it can be your finished goods, or it can be your work in progress. So there will always be some stock which is not sold but is ready to be sold. So that is also a set of a company. Then below we see current assets. Like current liabilities, current assets are also those assets which can be acquired in a year's time or which are easily liquidable or which can easily be turned into cash in near future. So what it can be? It can be your sundry debtors. That means whatever material goods you have been supplied, any payment against that is pending is a receivable. So it will come as sundry debtors. Advances, like the customers paid you advance, you should have also paid some advance to your vendors and the work is yet to be completed. So that advance is your asset lying with the vendor. Prepaid expenses, for any expenses for your office, maintenance or any other sales activity, any activity. So any expenses which you have paid in advance, paid for the whole year, but the service is to be given throughout the year. So those are your prepaid expenses and those are your assets. So that will come under current assets. Then comes your cash in hand and bank balance. These days, generally, all the transactions are done through bank. Very minimal, very petty expenses are done through cash. So cash in hand will always be a very small amount and bank balance is your bank cash lying with the bank, which is your asset. So this is the T type format of balance sheet. There are different formats of balance sheet. The required for the Companies Act is a different format. So this is a very basic balance sheet format which I have taken as an example. So we saw the format of the balance sheet. Now we will see or try to understand how to read the balance sheet. The word is very simple, how to read the balance sheet, but it takes years together or it takes certain efforts put in to understand a balance sheet. Balance sheet will give you lot of information. It's the health of the organization. So it will give you many important informations for, like, if you are the investor or would be investor, it's very important for you to understand where the business is heading, what are the liabilities, what are the assets of the organization. So we will see that there are certain aspects or important aspects when you read a balance sheet. The first aspect is the current assets. Current assets are basically those assets which are easily convertible into the cash or your equivalent to cash. So your current asset should be a strong holding, like it's the asset which the company can convert into cash immediately. That means if your sales were good, then your debtors or your receivables will be good. If your debtors have paid you good, then your cash and bank balance will be good. So it's a cycle that though the sale was good, but the money has not been received, so that is sitting in your debtors. If your debtors are paying you good, your cash and balance will be good. So this will show you the cash flow or the cash health of the company. Current liabilities, like the current assets, current liabilities are those liabilities which the company has to pay immediately or within a very short period of time. So these are the important liabilities, as in how well the vendors are paid or how well the creditors are paid. Are there huge creditors? So though you have a good bank balance or cash balance, but you have similarly a huge amount of creditors. So that would not be a good picture because your cash and bank balance will be going to be paid to all these creditors. So your creditors also are very important, like they should not be very high or they should not be very low. So there should be a rhythm, or there should be a cash flow rhythm in that. Then the shareholders or the share capital. Whatever profit we generate in the business goes and add up to your share capital. So in the share capital account, you will see that there is an opening share capital. Then there are certain drawings which the shareholders or the share capital or the partner does. Then there are dividend payments to the shareholders. Then there are the additions during the year. Whatever profit and loss you generate from the business adds up to the capital. So your share capital account will show that whether the business is being funded by the share capital or by the profits generated through the organizational sales or whatever trading or whatever the business is. So that will reflect the health or where the funding is coming from. So this will show you the fundings of the company. Now, you cannot understand the health from a one particular balance sheet or a 1 year's balance sheet. For that, you will have to compare for certain years, like for last 5 years or for last 3 years. You will have to see year on year growth and differences and different trends in the balance sheet. No health or no growth cannot be predicted from one particular balance sheet. You will have to go through different years and see what was the trend. How is the trend? Are my assets growing or are my liabilities growing? Is the funding being paid back to the investors, or the investor has to pump in money from time and again? Is the profit generated or is the loss generated, or how the funding is going on? How is the cash and bank balance? Are my debtors paying well? Are the creditors being paid well? What are the investments? Is the company having excess cash and bank balance, which they are smartly investing in certain others investments, like it can be FDs, it can be mutual funds, it can be any other share investment. So are they earning some extra money apart from their business? What are the assets owned by the company? Like, though they are into good business or they are into good cash inflows, but they don't own any assets, like they don't have any land and building, they don't have any plant and machinery. So what is the near future of this business? Like, is there any stability going ahead? So these are hundred questions which should come to your mind when you read each and every aspect of the balance sheet. Like, it can be the share capital, it can be the fixed assets, it can be the bank balance, it can be the sundry creditors, it can be the sundry debtors. So in one glance, you need to have all these questions in your mind. And when you start answering these questions, you will get the real picture of the company. Also, there are certain ratios to understand in a better way, or to compare different balance sheets and understand what is the health or what is the financial health of the company. So these ratios or the ratio analysis, I, I may take in my certain future videos, which will help us to understand like how quickly you can understand the health, rather than answering these so many questions coming into your mind. When you have these ratio analysis in front of you, you will get all your questions answered.
I hope I was able to explain you the balance sheet, an important financial tool, and also how to read a balance sheet. It cannot be like in one session you understand how to read the balance sheet. But I would suggest you all that you make a habit. You make a habit of reading the financial reports or whatever reports you find after every quarter. When the listed companies get audited, the reports are published in various newspapers. It can be Economic Times, it can be Times of India, it can be any local paper. So you will find a big financial report, like audited or unaudited financial report of various companies. So whenever you get time, you start reading them. There you will find the profit and loss account, there you will find the balance sheet, and there you will find the notes to accounts. So along with the balance sheet, you make a habit to read the notes to accounts because they will give you the additional information about the company. So friends, for today I think this is a lot of information for you. Start reading balance sheets, and also if you have any queries regarding today's video or regarding any aspect of balance sheet, please feel free and ask your questions in the comment section. I will be really happy to answer them. And how was my video? Please like it if you are liking my videos. Please share it to your friends and whoever requires this information, and subscribe to my channel. Don't forget to press the bell icon so that it will help you to notify my each and every video coming up. So bye for now. Enjoy and stay healthy and stay happy.